What's going on, you guys? Welcome to Risky Ryan Trades. Today we're going to be going over some of retail's favorite stocks. We're going to be talking about SOFI, Zeta, SharkNinja, which should be a retail favorite, and Oscar. We're going to be going over the weekly charts. We're also going to be zooming out and sort of looking at the 30,000 foot overview of where I think it's going to go over, during 2026 and just my overall thoughts. So, we definitely have a jam-packed one, so I do want to dive into this real quick. But before we do, disclaimer, this is not financial advice. This is for educational purposes only and for entertainment purposes only. If you get value out of this video, hit that like button. It helps me out a ton. Hit the subscribe. We have about 300 or so subscribers. We're trying to get those numbers up and grow the channel. So if you've seen a couple of my videos so far and you've been enjoying it and you're not subscribed yet, why not hit that subscribe button? And if you have any comments, thoughts, ideas about the names that we're talking about, go ahead and comment them below. SOFI. SOFI is through the GAN jail, the arc of despair. It is sitting comfortably right on the point of control, and it wants so desperately to reclaim this GAN angle and start climbing again. We also have a pretty nice looking U-shaped weekly candlestick pattern. Pretty much everything on this is telling me that this could be a great bottom buying opportunity. We might not get lower price action than this. I would err on the side of this being the bottom more so than there being continued downside. That doesn't mean go all in, but if you were waiting for an entry on SOFI, this looks as good as any, in my opinion. Zeta Global Holdings Corporation is the talk of the town. It's pretty much been Zeta and silver is all anyone wants to talk about the last week or two. Where have you guys been? I've been calling this name out for the last, I don't even know, 6 months or more. But you still have a golden opportunity to buy at levels that I've been buying at because price action has been pretty cool up until last week, where it broke out of this wedge very clearly, and honestly it looks just like silver, where it's just this Marabuzo candle, and there might be no quit on this price action. We could finally see it break into this GAN angle and out. So the days of buying cheap Zeta could be coming to a close here, and I think it's a toss-up whether it just follows this GAN angle or we go straight up and break this all-time high and get up to this GAN angle. That would be nuts. I would love to see it. That would be nuts. And it honestly, that doesn't even need to happen for Zeta to be a good buy right now or investment right now, because even at today's prices, and it just follows this GAN angle, 52 weeks out, we're at a very respectable 33% gain. And that's my minimum. That's my conservative estimate. But if this momentum keeps up into 2026 and it starts getting the respect that it deserves, which it is starting to get the respect that it deserves, absolutely, I could see Zeta breaking its all-time highs, re-rating, and reclaiming this GAN angle that it tried to get so long ago. And if it were to do it next week, that's like a 275% gain. I don't think it's going to happen next week, but if it were to reclaim that GAN angle, yeah, like we're looking at a really large gain in a short amount of time. So on the low end, we have one of the best investments in the market, and on a bullish, hopeful sort of perspective, you could have an absolute banger of price action ahead. So Zeta, no matter what angle that you look at it, it looks incredible. Oscar, on the other hand, is looking kind of rough, and I did trim my Oscar shares reluctantly. I still have, and this could be the bottom. This could be the bottom that I trimmed it at, but it's just there's just, I don't know, better opportunities in the market. It's starting to look really rough. This GAN arc just keeps batting it down, and so there's a lot of red flags that Oscar could be a value trap or opportunity, a lot of opportunity cost in this name over the course of the next year. There's just more negative overhangs over it than I like to mess around with. And if I'm going to be in healthcare, it's unfortunate because a couple of the favorites like Hims and Oscar, they have a lot of overhang, a lot of red flags, a lot of like obvious things that could drag the stock price down. And so I still have, a decent position. It's still a, significant portion of my portfolio. It's just one of my smaller positions now. And I'm going to be looking at other names like Tempest AI. If you have medical, I'm looking for things in the healthcare field that are worth looking into, that are kind of in this market cap range of 1 to 10 billion, somewhere in there. Comment below what I should look at, because I do think that healthcare is going to do really good next year, because biotech's going to do well next year. Did well this year, and I think the Russell's going to do good. Anyways, that's Oscar. Now let's round it out with SharkNinja, the name that you should know about. This one, dude, this thing, there's videos out there. I think I've done one. It beats earnings. It's a compounder in plain sight, and it's consumer discretionary, which is a underallocated bucket within almost all tech investors' portfolios. And if I go 52 weeks out, I'm seeing a 50% gain from today's prices, which are actually near all-time highs. That's what's crazy about it. I feasted on this dip. I was even buying all the way up here because guess what? Even at these prices, it was a good deal. It was a good deal. So the only reason it's sold off is because, remember, the consumer is weak. The consumer is weak. The consumer is weak. And then what happens, like it always happens? Oh, I guess that data was wrong. I guess the consumer is actually okay. I know, hey, listen, I'm like middle class. So if you're middle class watching this, you don't feel like the consumer, you is strong. I get it. But guess what? SharkNinja, the consumer is strong with them. The force is strong with them. They beat earnings, they beat revenue, they beat and raise, and that's what they do, and that's their job. And it doesn't matter what's happening in the macro, they are compounding. And you can see here that we've been in this range since October of 2024, and it's time to get out. It's time to get out of this range. So I see, 50% over the next year, but I could also see us getting there a lot sooner, because once we break these all-time highs, we could go straight up to like 185. I could see that happening by, God, who knows? I mean, like summer or sooner. So SharkNinja, put it on your watch list. It's one of my favorites. This is not financial advice, but this thing is ready to go. This thing is wound up and ready to go. All right. I'm obviously pretty wound up and ready to go. So I'm going to get on to the next thing that I was going to do today, but I certainly hope that you enjoyed that. If you did, don't forget, hit that like button, comment down below what you thought. Who is your favorite? Who's your favorite out of these? There's probably one of these names. That's why you clicked on this. So tell everybody why that stock should be a larger part of their portfolio, not financial advice. And subscribers, I'm up to about like 310, somewhere around there. Would love to add you as a subscriber if you've been watching these videos and enjoying them. Hit that subscribe button and join us. Let's grow this channel. And until next time, Ryan out.